Aloha, YouTube investors. How is everybody doing today? My name is David Jansen. Welcome to my channel. Today we are going to be looking at StarBUX, ticker symbol SBUX is the ticker symbol for StarBUX. We're going to do a quick summary stock analysis of the company. But before we get into that, please subscribe to the channel if you haven't already. Thank you to everybody who has already subscribed and continues to follow my channel. And please hit the like button as well too. And as always, feel free to share with your family and friends. So StarBUX is a company that I really like. At the end of the video, I'll give you my opinion and what my plans are for holding this company. They did just announce their earnings, so that'll be part of the stock analysis that we will be doing in this video, that I'll be doing in this video for you. But I do have them in my Robinhood portfolio, and as you can see, my Robinhood portfolio for the first time is up over 32%. This isn't a portfolio that I trade with regularly. This is my growth portfolio. My Roth IRA sits with M1 Finance, and then I have an individual portfolio with Fidelity. So if you would like to see how those have performed, I'll put a link up here for you to check out at the 1 minute 30-second mark for Robinhood, how it performed in 2020. And then for M1 Finance, somewhere around the 2-minute mark, just after the 2-minute mark, for how it performed in 2020. And then a little after the 3-minute mark, I'll have a link or a card pop up for Fidelity. Fidelity does a really strange thing. They only show you how your portfolio is performed all time and for the day. It doesn't show you like Robinhood here where you can see all time by the year, the month, the week, the day, or the 3-month. Or M1 Finance, which shows you by the quarter, by the year, by the week, by the day, and all time. So it's a little bit different, but I am surprised, pleasantly surprised at how well all three of my portfolios have performed. I've only been investing for under 2 years, and the majority of it's been through recession/pandemic when the stock market crashed in March, and so I was able to pick up some shares. And one of those companies that I was able to pick up, I believe it was in April or May of last year, 2020, was StarBUX. And originally I had taken 3 shares at about $68, and then the stock price rose to about 75, and then it fell down, and I was like, come on, get down to 68. I'd like to add some more because I do try to dollar cost average. Especially with my Robinhood portfolio, which is my growth portfolio, I would much rather dollar cost average down because a lot of these holdings in my Robinhood portfolio don't pay a dividend, but StarBUX does. So eventually it got down to $71 or something like that, or maybe it was just barely over 73. So I added a couple more shares, so my average share price for the 5 shares that I own is $73.41. So my total return, as you can see right here, is over 40%. So like I said, I'm very pleasantly surprised at how well things have performed. And I found out that investing really isn't that hard in the early stages. It might get harder as you add more money to your portfolios. So that's why personally I am more heavy on my Roth IRA and my dividend growth portfolio with Fidelity than I am with growth companies in Robinhood. But I do believe that you should have some growth. So I am doing sort of a barbell approach to investing where I have these solid Fortune 500 blue chip companies on one side, and then I have these growth companies on the other. Now, StarBUX isn't necessarily a growth company. They haven't saturated the globe like Coca-Cola with their products being in every single country. But as you can see here, according to Robinhood, they do have the Americas, China, Asia Pacific, Europe, Middle East are all areas that they have growth, and then other places that they plan on growing, which is channel development. So they are pretty much all over the world, but mainly everything is done through the Americas, through North America. As far as their dividend is concerned, according to Seeking Alpha here, you can see, let me scroll down here, you can see the dividend yield is at 1.74% with an annual payout of $1.80. So for every 1 share that you own for the year, you will get $1.80. If you own fractional shares of StarBUX, then you will get a fraction of the $1.80 for the year. So, but most people are going to try and own more than just 1 share. Like I said, I own 5 shares, so if I times 5 by 45 cents, which is the quarterly payout, every single quarter is 45 cents for either your fractional shares or for the 1 share that you own or multiple shares that you own, that tells you how much you will get paid. So their next payout date is March 5th of this year. The date to have purchased your shares in order to get paid on March 5th is February 17th. So any shares or fractional shares that you own of Starbucks from February 16th, from here all the way to February 16th, you will get paid this 45 cents per. So dividend growth is 10 years, which is strong, and I do like that their 5-year growth rate, according to Seeking Alpha, is almost 20%. The payout ratio is a little bit high, but Starbucks has been a very well-run company for a long time. So when the stay-at-home economy and the pandemic hit and they had to close stores and everything, they were still relatively good. Now, I don't remember off the top of my head how much they drew down in debt on credit to help them get through closing their stores around the world. But when we look at this, you'll see how much money that they actually have in cash flow. So the numbers weren't great, and in fact, this article says lackluster results from Starbucks, and it's actually worse than lackluster. I mean, 5% down in revenue isn't huge. They still did bring in $6.75 billion over the year, but you can see their net earnings was down 30%, and adjusted earnings per share and GAAP earnings per share down over 20%. And same thing in the 3 segments that they operate. The Americas, International, and Channel Development. The Americas was down 6%. International was up 5%, thankfully to China. China is the largest area where they have stores, population-wise. And China was closed up everything first and then opened up things first. So there was going to be more sales and revenue going through that country than other countries, where here in the United States there are still a lot of stores that Starbucks owns that aren't open. And if they are, you probably just order in the app, walk in, grab it, and leave, or you go through the drive-through. So where before, a lot of the appeal for Starbucks, besides pumpkin spice latte and the midday frappuccino, when you need that sugar rush to get through the rest of your workday, was the fact that people will come in, use the Wi-Fi, maybe do some work, maybe students would go in there to do some work. I believe when I worked at a Starbucks, briefly, I worked at a Starbucks, you would see students come through all through the day. And at nighttime, that's pretty much was the whole store, was students, working for free Wi-Fi, basically. So, can't get my words out. Free Wi-Fi, Starbucks. So basically, you would sit there, you'd order a Frappuccino or a coffee or some other drink, and then you look over at the case and you see a muffin, you see a breakfast sandwich. They also have pre-made salads and stuff like that, and that would entice you to buy other things because you're sitting there working on this paper, working on something for your job, and now you're starting to get hungry besides the coffee. But with the stores being closed, they didn't have that extra revenue coming through. It was basically whatever somebody ordered in the app, pulled up in the drive-thru, or walked into the store, got it, and walked right back out. So comparable store sales, as you can see here. And by the way, I got this graph off of Alpha Street. I use this in a lot of my videos for the companies that they have it for. Global store sales down 5%, the Americas and International down as well too, but all in general is down 5%. And you can see the decline here. So the first quarter of 2020, a lot of their stores were still open, so they still had good growth of 5%. But then as they had to start to close stores, things went from 10% to 40% and then jumped back to 9%, and now we're here at 5%. So things will get better for Starbucks. They're a very well-run company, and people absolutely love their products, which is one of the things that I look at when I do invest in a company besides the numbers or do people like the product? So people absolutely love Apple. They'll do anything for the next Apple product, whether it's a MacBook or the phone, and the same thing with Starbucks. What are you doing this afternoon? Oh, I'm going over to Starbucks. Can you go get me some Starbucks? Who's doing a Starbucks run today? If you work in an office. So, but with a lot of that traffic being down this last year in 2020, there wasn't so much money for them, but things will rebound pretty easily. Now, personally, I did a video somewhere in June or July, maybe even September of last year, talking about how I thought Starbucks would be trading at about $85 to $90 per share. It has pleasantly surprised me at over $100 per share, so that's why my gains are so good, and it's just because I know people like it. But there's other reasons why the stock is trading as well as it is. It's not because of me, obviously. I'm just on YouTube here, and I'm a new investor in general, so I'm still learning stuff. But I don't think it's unreasonable to assume that it stays in the 80 to 90s on a regular basis. Now, if it drops, this is just my personal opinion on my future with Starbucks. If it drops down to that $73 again, where I have it, my average share price $73.41, it would have to be below that, probably $73 even or $73.10, something like that. Then I'll probably add another share. Now, like I say in all my videos, I don't have a lot of money, and I do have other companies that might drop in price as well too, and so I kind of have to weigh which one am I going to put this extra $25 or $10 or $100 into. So as far as the 2021 outlook for Starbucks, keep saying that over and over again, you're just going to not be able to say it after a while. Global comparable store sales growth of 18 to 23%. And they do expect their GAAP earnings per share in the range of $242 to $262, with a consolidated revenue of $28 to $29 billion. So something on the positive side for Starbucks, besides the fact that people absolutely love their products, is that they did add active rewards membership in the U.S. grew 15% to almost 22 million people. So that is people that go there on a regular basis, enough on a regular basis to earn rewards through their membership, and that grew 15%. So as soon as their stores are able to open back up again and people are able to dine in around the world, which might be this spring or this summer of 2021, their revenue and their sales numbers should go through the roof. So I don't know how that will affect the stock. Typically, when revenue is good and growth is good, the stock price climbs up, but the stock market seems to be propped up by the U.S. federal government, and you've got, some people that, just follow the news. Whatever the news says, if the stock is trading good, then they buy into it. Like GameStop recently here just went through the roof. As people start to see it go through the roof, they think it's amazing, so they just start buying into it regardless of what the numbers say. But in Starbucks' situation, the numbers aren't great, but the numbers have been great in the past. And the reason that the numbers are great doesn't mean that the numbers will stay down in the future, because that reason will be removed. So that's how I'm looking at it. Another positive thing here with them is their cash and cash equivalents is over $5 billion. So that has definitely helped them get through this, through closing up their stores. I don't remember off the top of my head how much they drew down on debt for this $5 billion, but they were very well run and had nice cash flow at the beginning already as it was. So I wouldn't be surprised if they, were kind of doing all right on the cash flow side before they actually needed to buy more soap and buy more sanitizers and buy more cleaning supplies and masks and stuff like that for their employees. And I don't know if Starbucks decided to increase the pay of their employees. I know as a company, they decided they were going to pay $15 an hour, but I don't know if they decided to give them extra pay because of the stores that were open. So anyway, take a look at these other videos here that I have. Please subscribe to the channel if you haven't and like the video. Until the next one, which will either be Verizon, Lockheed Martin, I have a bunch of other companies that I'm going to do some videos on. Stay tuned for those. Mahalo and aloha, everybody.